In the previous video, we already introduced the first and most important concept, which is scarcity. More specifically, we said we have unlimited wants, but we have limited resources. So there's always a gap in between. And when we talk about the scarcity, what we actually mean is scarcity of resources. Okay. Now, because of that, we have to make choices. Okay. We don't have enough productive resources to satisfy our needs, so we have to pick. That leads to the first principle of this chapter. The principle number 1, people face trade-offs. Okay? Now, there are different interpretations of this principle. One of them is people make rational choices to make themselves better off. Now, when we make decisions, we definitely want to make ourselves better off, right? So that's pretty easy to understand. What needs to be a little more explanation is the rational choice, how we define it. What's so-called rational choice? Okay. Now here, rational choice is defined as the decision maker uses the available resources to best achieve the goal of the person making the choice. Okay? Now here I already highlighted 3 key phrases in this definition, but I would like to use a real-world example to explain what they mean. Okay? So here, let's check out a real-world trade-off. Okay? Suppose we or you as a decision maker has $2,000. Okay? By spending the $2,000, you can have 3 choices. Okay? The first choice is to buy the latest version of MacBook. Okay? So you can get something quite useful. The second choice you come up with is, you said I want to relax. Okay? So I want a beach vacation. A beach vacation. Okay? And the third choice, you said, I don't want something useful or relaxed. I want something challenging, exciting, kind of the once in the lifetime. So you want to go skydiving. All right. Now here we find that the $2,000 in this case would be our scarcity. Okay. Now here, of course, we're using a monetary resource as an example, specifically $2,000. Okay. Now, because we only have $2,000, so we cannot take all 3 of them. We have to pick one. So these 3 are the choices in front of us. Okay? So because of the scarcity, we have to make choice. Okay? Now, of course, in reality, you may have your own choices. Okay? You said, I don't like any of these 3. I can come up with my own list of choices. That's totally fine. Okay? Now, here, let's see. For example, okay, if we do a quick poll, we cannot do that online, but during the face-to-face in the classroom, I usually did this with my students. Okay, I ask them, which one you prefer, supposing that, only these three choices are available. Okay, now here, suppose, okay, we got 6 students out of 25 who prefer a MacBook. Okay, and 10 of them prefers a vacation on the beach. Okay, and let's see, 14 of them would really like to do skydiving. Okay, now here the question is, which one is the rational choice? Okay, which one would be the rational choice? Now here you might want to say that skydiving is a rational choice because most people go with it. Is that correct? Here, I would suggest you to pause the video and think about this. Okay, which one is the rational choice? Do you believe skydiving is a rational choice? If you were the decision maker, do you want to go skydiving? Now, before we answer the question, let's go back and relook at the definition of the rational choice. The first key phrase is available resource, right? So you got to make sure it's available. If the resource is not available, then there's no point of looking at all of these, right? So here, the $2,000 is the available resource, right? Best achieve the goal. That means among these three choices, you got to pick your favorite, the very best one, right? Now, the last key phrase here, the third one, the person making the choice. In other words, the rational choice depends upon the decision maker. Your rational choice may or may not be mine. Okay, so here what we're saying is, this rational choice depends. Okay, and remember, there's no one size that fits all. Right? Every person is different. Every person's preference is different. So for example, someone in the class may say, I already did skydiving last summer. I don't want to go and do it again, right? Or another decision maker may have, the heart disease, which stops him or her from skydiving. That's why they went with other choices, right? So you cannot say because most people went with the skydiving must be the rational choice for everyone. That doesn't make sense. Okay, so the rational choice here, again, it's subjective. Okay, it varies across people. Okay, now here, suppose, let's go ahead and talk about these choices. Okay, suppose your rational choice is skydiving. Okay, suppose it's skydiving. Then what is the real cost of this, of go skydiving? Okay, what is the real cost? Again, I would suggest pausing the video and think about it. Our common sense would say, here to go skydiving, we have to pay $2,000. That's the information given in the question, right? So the real cost is $2,000. Is that true? In economics, we said your real cost is something you have to give up to be able to take your first best choice. Okay, so for example, if your first best choice is go skydiving and second best choice is a vacation on the beach, when you have $2,000, you decided to go skydiving. That means you have to give up the vacation on the beach or the purchase of a MacBook, right? So the real cost, what we said is the benefit or the pleasure you could receive, you could get from your second best choice. In this case, it would be your the vacation on the beach. Okay, so here the real cost, it's what we call the opportunity cost. Okay, would be the benefit or pleasure or satisfaction from the second best choice. Of course, if you believe that a brand new MacBook is your second best choice, then here the opportunity cost of skydiving would be the benefit or pleasure or satisfaction from purchasing a brand new MacBook. Okay. Why it's called opportunity cost? Because again, by taking the first best choice, you have to give up the other opportunities. Okay. Now, about this principle, there's one more thing we want to briefly mention, which is the policymaker's trade-off. Okay, we want to briefly talk about this because later when we talk about economic policies, we oftentimes would have to answer the question, what's your preference between efficiency and fairness, or efficiency and equity? Okay, now efficiency means you can produce the most, for example, okay, generate the highest level of benefit. The fairness means as a policymaker, you got to be fair. The decision, the policy must be fair or equally accessible to all people in the society. Now, a quick example could be the federal government decides to give $10 million tax dollars back to the taxpayers. Okay, so it's like the tax cut policy conducted by the Trump administration. Okay, suppose the budget is $10 million. Now there are two ways you might be able to do it. The first one is everybody in the society receives the equal amount. Okay, suppose we got 10 persons here in this class or this society, then each one receives $1 million. Fair enough, right? The second case, which the second policy, which policy choice, which focusing more upon the efficiency could be, if one person among the 10 who can really, once he or she receives $10 million, they can produce a lot more. Okay. Now you would say, well, we don't like this because only one person received the whole pie and other persons did not enjoy at all. In reality, what we could say is, let's just give this $10 million to that person and let him or her produce or make more money. And later, the government is going to tax him or her and give the tax dollars back to us. Suppose each of us in the future would receive $2 million. Do you still think this is a bad idea? Okay, so again, efficiency versus fairness. Think about this.